Yeah. The main reason why most people are not profitable in this industry is because they do not understand the language of price. Hello, everyone. This is Ageless. All right. So for some time now, I'll be treating this particular topic, which is strong fair value gaps and weak fair value gaps. So I started with this, and later on we move on to this, and this is the one that we'll be treating now, and probably this particular one. And I want you to pay attention to this because after this, after analyzing this, I will go into the chart and I will explain to you and I will reveal some certain secrets to you that you will use to be what profitable in the long run. Because one of my students once reached out to me. He was like, "Oh, Ageless, I love this trading strategy, especially this particular one and this one." And he was like, "Oh, I love it because it hardly fails." Yes, it hardly fails. So now, fair value gaps that are in contest with another fair value gap are what? Strong fair value gap. Most people don't understand what we mean by what? Contest. So I will be revealing it to you now in the chart. Okay, but before we move on to the chart, let me quickly explain it to you here. Now, this is a fair value gap. And don't forget, fair value gap is a magnet and it's what? It is also a rocket. It magnetizes price towards itself and it pushes price away when price gets into it, right? Fine. It is the leg that you will use to move from one point, from one PD array to the next PD array, maybe probably from this PD array, which is fair value gap, to the next swing point, which is also a PD array, right? Now, this is a weekly fair value gap. Can you see this is a weekly fair value gap, right? Now, if you look at it from here now, it is also a weekly fair value gap. This weekly fair value gap, I've represented it with these two lines, right? Now, if you now go to the lower time frame, now, first of all, we expect our price should come into this weekly fair value gap. And when price gets into this weekly fair value gap, then price will now what? Push it away. And the moment price gets into the weekly fair value gap, that is when we should be looking out for a buy. That is when you should be looking out for a trade opportunity, right? Now, this is it. This is this weekly fair value gap here now, represented by these two lines. Can you see weekly fair value gap, right? Now, price has entered into this fair value gap. And again, don't forget, this weekly fair value gap is a bullish fair value gap. Can you see it? It's a bullish fair value gap. So it is meant to what? To keep pushing price upward, right? So now, we expected that when price gets into it, it will push price away. It will push price away. So when we now go to the lower time frames where we'll be taking our trade, because you are not meant to take trade as a day trader. You are not meant to take trade on a weekly time frame. Okay, you do your analysis on the higher time frame, such as monthly time frame, weekly time frame, daily time frame, 4 hour time frames. Okay, then you now go to your what? To the lower time frame to take your trades. Now, if probably you found a fair value gap on the weekly time frame, you go down to 4 hour time frame or probably your 1 hour time frame to take your what? To take your trade. Now, on this particular one now, so we move down to what? 4 hour time frame to take our trade. Don't forget, this is the weekly fair value gap here. So when price enters, you understand, this is 4 hour chart now, right? When price enter, so we expect that this weekly fair value gap will push price away. Now, in the process of pushing price away on this lower time frame, it now created what? Created a fair value gap out of this um, weekly fair value gap, right? So this bullish weekly fair value gap created another bullish 4 hour fair value gap. So this 4 hour fair value gap is what? Is a strong fair value gap because it is in contest with the weekly fair value gap. Okay, weekly bullish fair value gap created another weekly bullish, the word bullish fair value gap on the weekly created another bullish fair value gap on our entry time frame, which is what? 4 hour. So this 4 hour fair value gap is in contest with what? With the weekly bullish fair value gap because both are what? Bullish. So they are what? In contest. So this bullish fair value gap that is going out of this weekly bullish fair value gap is a strong fair value gap. This is an opportunity for you to take your trade and ride the market upward. You see it? Because when a fair value gap is created, the duty of a fair value gap is to create another fair value gap so that what that fair value gap will create another fair value gap, and it will what it will continue to form a trend. So because what makes a trend is the creation of what fair value gaps. Okay, because fair value gaps are the leg that you will use to move in the market. Okay, that is why I will always preach it. You need to understand the language of price. Okay, it's telling you a story. When you understand this story, when you're able to speak it, you will be highly profitable. So don't forget, this is a weekly bullish fair value gap that has created another bullish fair value gap on the lower time frame. So this weekly bullish fair value gap and the 4 hour bullish fair value gap, or it could even be 1 hour bullish fair value gap, they are in contest. Okay, now let's continue to see that on our chart now. So if we check now, this is what weekly time frame, right? On this weekly time frame, you can also find it on any time frame, but notwithstanding, but we are using what this weekly time frame. On this weekly time frame, look at where the price is at the moment. But do we see a fair value gap here? Yes. If you do not see it, let me just map it out for you to see properly. Can you see it? I've mapped it out. This is what a fair value gap. You see that? That is a fair value gap. So it is expected that price should retrace back into this fair value gap, tap into it. They will now start looking for what entry. Then price will now push what price away from what from this fair value gap. Okay, that is our expectation. Now let's continue. Look at it. So this is what we want price to do. Price coming into the fair value gap as a magnet, then price going out of the what fair value gap as a rocket. Can you see on this weekly time frame? So we now wait to for price to properly enter the what the weekly fair value gap. Has price entered? Yes. The moment price entered, can you see price entered on two what on these two black bearish candles? This is the first black, this is the second, and it entered the what the weekly fair value gap on the weekly time frame. Now this is an opportunity for us to start looking for what entry, so that we enter on a buy, then we ride the market upward. Now let's look at it. Now for you to now what take an entry, you will now, after price has entered this fair value gap on the weekly time frame, you now go down to the lower time frame for your entry. If it is weekly, you go down to 2 time frames, you understand, for your entry. Now 1, 2 daily and 4 hour. So that is what 2 time frame. You will enter off of what 4 hour what time frame, or probably 3 time frame down below the what the weekly. This is the weekly here. You count 3 time frame below. 1, 2, 3. So you could have entered us off of what 1 hour. But this scenario now, we want to use 2 time frames. Okay, you can either use 2 time frame below or 3 time frame below. So if you use 2 time frame below, that means you will enter off of it when there is what a fair value gap out, just a single fair value gap out of what out of the higher time frame fair value gap. But if it is 1 hour, you enter when there is two fair value gaps out. But now we are going to use what we are going to enter from what 4 hour time frame. Okay, now let's switch this chart to 4 hour time frame. I will click on this 4 hour now, so the chart will move on to what 4 hour. Can you see this line shows our what our weekly fair value gap up there, right? This line shows our weekly fair value gap. Look at the arrow that was coming into what into the weekly fair value gap. Look at the two black candles that came in on that weekly fair value gap. So this candle shows the two candles that came in, but now this is 4 hour. So now that price has entered this weekly fair value gap, we are showing it on the 4 hour time frame right now, right? Then we wait for price to move out of what out of this weekly fair value gap, creating a new fair value gap. Now can you see there is a fair value gap, 4 hour fair value gap that is created out of what? This weekly fair value gap. So this 4 hour fair value gap is a strong fair value gap because it is in contest with the weekly fair value gap. Because this weekly fair value gap is a bullish fair value gap that has created another what? Bullish 4 hour fair value gap. So you this one here you can enter from here because this is a strong word fair value gap. So if you miss this, you wait for another word fair value gap, 4 hour fair value gap to be created again. So you can use that fair value gap leg again to enter. So such fair value gap is a strong fair value gap. Now let's see how it play out. Before that, let's just mark out our 4 hour fair value gap. Can you see this 4 hour fair value gap that has been marked out here that is coming out is a contest with this what? This weekly fair value gap. Okay, this is our entry. This is our entry fair value gap. You will enter off of this fair value gap, then we will now ride it up to target this swing points. Okay, you ride it up to target this swing point. Now let's see what eventually happens. Whoa, can you see? Look at the 4 hour fair value gap here. If you had entered here and you place your what? Your TP here, or probably somewhere close, 1:2 or so, you would have made a lot of money for within some maybe probably 2 or 3 days. You would have made a whole lot of money. As you can see that. So when a fair value gap is in contest with a fair value gap on the higher time frame, such fair value gap is a strong fair value gap. See, that is one of the secrets that you need to know that you can also um, employ in your what? In your trading. Okay, now let's move on. Now we have treated this, and we just treated this now. Fair value gaps that are in contest with what? A fair value gap on the higher time frame is a strong fair value gap. Now let's move on to the last one on this series. The fair value gap that disrespect other fair value gaps are what? Strong fair value gap. The fair value gap that disrespect, the word disrespect simply means is a strong word. Okay, now they are what? Strong fair value gap. So I will be explaining that to you now in a moment and you will understand it. So I want you to employ this in your what? Trading strategy. Now let's look at it. This is a bullish price action, right? And on this bullish price action, as you can see, we have what? We have fair value gap that are created as price was going upward. And you see there is one here, there's one fair value gap here, there's another fair value gap here. So we expected that price will continue to create fair value gap until it gets to what? Maybe a swing point, a swing high up there. But notwithstanding, the price now reversed. When price reversed and entered into this fair value gap, we see expected that okay, as price reversed and pushed into this fair value gap, it will push price away, but it never did. Instead, it created a bearish fair value gap. Okay, a bullish fair value gap that was supposed to keep pushing price upward, creating more bullish fair value gap. You understand? It never did. It now was price now reversed and created a bearish fair value gap. So this bearish fair value gap has countered this bullish fair value gap. So this bullish fair value gap now is now a weak leg. It's a weak fair value gap. This one is a weak fair value gap. This is now a strong fair value gap. So this is where you would have what, jump in to ride the market down. You would have been selling hugely. Now let's take a look at it. We map it out now. Let's look at it. This is the bullish fair value gap that we are expecting to what, to push price upward. And when price came into it, it never did. Instead, it created what? A counter what? Bearish fair value gap. This counter bearish fair value gap is very strong. So it is a strong what? Fair value gap. So this is now a weak fair value gap. This is where we will now what? Change our direction and start trading what? Downward. So whenever you see this, you should know that what? The market has changed direction. Okay, the market has changed direction. Price is about to what? Move downward. So you use this fair value gap to start riding what? The market down. Now let's see how it's played out in our chart. This is 4 hour time frame. You can find it in any time frames. Okay, but for the purpose of this, we are using what? 4 hour, right? Now can you see this is a price action that has been moving on for a long time. Now, do we have a fair value gap on this leg? Yes, we do. So if you can't see it, let me just map it out so that you can see it properly. Can you see? Can you see we have 4 hour fair value gap here? So as this price is going up, this is a bullish what? Price action. We expect that what? Price will continue to be bullish after price has retraced back into this fair value gap. We expect this fair value gap to push price away and continue. So now in a moment, in a situation whereby it never did, then we now it will be suspicious that okay, maybe probably what this fair value gap is going to be is a weak fair value gap. Now let's look at it. As price kept on moving on, you understand, price was now ranging. Okay, when price is ranging, because one thing about fair value gap is that fair value gap is expected to create a new fair value gap instantly for price to keep what, keep pushing upward. But look at it, this fair value gap as it was created, now it was, price was now ranging. Instead of it to, for price to tap in and continue to create a new fair value gap and continue upward, but it never did. So this should tell you, even tell you a story that okay, this price wants to revert because it was ranging. Okay, and when it ranged and it hits or it entered into this fair value gap, we were still expecting, yes, we were still expecting that okay, this fair value gap should now push price upward. Can you see this arrow? That is our expectation. Now looking at it from this perspective again, if you look at it, if you draw your trend line, okay, so especially in my advanced class, I have taught it three touches of the trend line. Okay, now on these three touches of the trend line, this is the first touch, this is the second touch, this even the third touch, can you see, is in alignment with what, with that fair value gap region. So therefore we are even expecting that what, this fair value gap will push price away. Okay, will push price upward because this is the third touch. That is why I will always say, I have taught some of my students in the mentorship, you understand, during the advanced class when I was teaching them just chart pattern, not ICT. I told them that when you draw your trend line, the on the third touch, you wait for what, inverted pin bar. You understand? When there is a pin bar upward, that is when you will take your trade. Okay. And now let's take a look at it. Now, what eventually happened was that, can you see, there is no pin bar here. So price is even ready to push down. And this fair value gap that we have been relying on, that we are hoping that it will push price upward, what it did was that what, it never was push price. Instead, it created a bearish fair value gap. Can you see the bearish fair value gap there? Let me point it out so that you can see it. Now look at it. Look at it. See, this is it here. Can you see? It has created, instead of this bullish fair value gap to reject price and push price up, instead a bearish fair value gap was created. So this is to tell you now that what, this price condition has changed direction. Now this fair value gap that is bearish, that has been created now, is now a strong fair value gap. This one is now a weak fair value gap. It is no longer what, it does not have the energy anymore to what, to push price, because there is now a counter fair value gap, bearish fair value gap that has been created. So you will now start capitalizing on this and start trading with this. Okay, you now change your what, your position, your direction, and start for selling. You understand, instead of buying. Okay, so now that this has been disrespected, this is what, a respect. Now this one is now a strong fair value gap. Okay, now then you enter off of that, and when you enter off of that, what happened? Can you see? Price eventually went down. In fact, price collapsed. Can you see that? This fair value gap is the reason why we have this major move, because it changes the direction of what, of the trend, because this one has failed, that eventually became a weak fair value gap. All right, you understand it? So that is what, that is a fair value gap. You understand, disrespecting the other fair value gap. Okay, this bearish fair value gap disrespected this bullish fair value gap. I don't think there's any other example. Okay, so that's just that about that. And funny enough, you can always drop your questions on the comment section. I want you to like this video. I want you to subscribe if you've not subscribed. Drop your question on the comment section. I will definitely respond to all the questions. Okay, trust me. And when you implement all of these strategies in your trading, you will be highly profitable. Trust me. And make sure you keep everything so simple. Okay, and while you also what, manage your risk. All right, thank you, Aces.